Thank you. Thanks a lot, guys, for joining us. My name is Samir, and I'm part of the Digital 50. Welcome on board. I know you guys have been waiting. Some of you have been waiting for some time. I thought we will start a bit early. And we'll obviously wait, right? The official time is 4 o'clock. We will actually start in maybe a minute or two later. So 4:02 is when we will actually start the session. And the way we'll do it is that we have our guests here who will also be guiding us. So we have Pratyush and Steve here who will guide us on their perspective on their areas as well. So basically we'll run almost for 45 minutes in this session. So we'll start with who we are, which is the Digital Fifth. We'll then follow up our perspective on what we have seen on AI/ML side and data side, what kind of insights we have seen. Then we'll have a quick 15-minute session from a data perspective, primarily how data is useful for underwriting, data itself, from where you can get, what is the purpose. That we'll get from Pratyush, which is who's heading business from AuthBridge. And then we'll end up with Steve guiding from AI/ML perspective. So he's the CTO of Lokyata, which is again one of the best decisioning tool in the country. So he will guide us on that. And then last 15 minutes and maybe more, we will spend actually on Q&A. And idea is that it's not that you should hear what you hear, right? We should also get a perspective from your side saying that, okay, if you have questions, we should be able to respond back to them. And that's ultra critical. Otherwise, anybody can have any video and you can have it on YouTube and we can record it. We know that typically when people join us on these sessions, the interaction levels are very high. We'll also ensure that we'll not end the session exactly at 5. We are open for questions. So last time we did it, in fact, we started this series very recently. And in the previous series, we were looking at more on the platform side. And many of you would have joined that session as well. And we went till almost maybe 85 minutes overall. Today, we have kept almost 90 minutes. If the questions are there, we will respond back. And if we don't know the questions, we will try to at least respond back what we don't know. And we'll come back on that. If we don't know at all, we'll tell you there's no way we will ever know the answer. Maybe bureaus will know better answer than us. And we'll be sort of very, very clear about it. So I think it's exact. And if there are any questions you have, feel free. There's a chat window available in which you can actually ask all your questions. So chat window is available where you can ask all your questions back to us. And we will take one after another, right? So it is possible that if we may not be able to answer all questions in something like maybe 30, 40 minutes, what we'll ensure is that we'll try to respond back to you. In the interim, one of the key aspects is that I'm sure many of you will be interested in giving feedback as well. So we'll share our feedback form to you as well. And all those and that one of the option of the feedback form is you can ask for our presentation itself. So we will share this presentation back to you. For all those who shared your feedback back to us, we'll also know that you're interested in knowing more about the products, platforms, and all of that. And we'll share back you with our deck as well. So again, as a feedback, if you give us your feedback, which will going to come up as a link to you. Once you give the feedback, we'll send you back the deck as well, along with anything which you are really interested in. So that's largely what it is. I think good to see so many of you joining. The number is already 71. Amazing. So yeah, this is good. I think we are exactly at 4:02, and I said we'll start at 4:02. Maybe a quick, quick introduction from our guest side. So maybe Pratyush, you want to quickly introduce yourself and yeah.
Thanks, Samir. Good afternoon, everyone, and welcome to this session. My name is Pratyush Chandramadhur. I head the revenue and business for AuthBridge. I take care of the BFSI vertical. I have got about 20 years of experience in the lending industry, and I've worked on the risk management, business development, fraud and identity solutions, and the operational excellence. Prior to working with AuthBridge, I have worked in various roles in Hero FinCorp, Clicks Capital, Experian, GE Capital, Bajaj Finance, and ICICI Bank. So look forward to the session today, and we'll talk more about the role of data and AI in the credit underwriting. Thank you.
Thanks, Pratyush, for joining us. Yeah, I think Steve, can you just quickly introduce yourself?
Sure. Thank you very much. And thanks everybody for joining. My name is Steve Bireley and I'm the CTO for Lokyata. And Lokyata builds platforms for lending decisions using advanced analytics and artificial intelligence. I've been in the software for financial services business for 30 plus years, and look forward to the session today and hearing some of your questions at the end.
Thank you, Steve. And Shashank.
Yeah, hi, hello everyone. So many of you may be knowing me. So I'm Shashank. I take care of the consulting at the Digital Fifth. It's almost 1.5 years with the team now. So prior to that, I was with DCB Bank, where I was responsible for the digital banking, setting up the open banking platforms, and also took care of the complete IT infrastructure, the data center, and the governance and compliance. Prior to that, I was with Wipro and L&T Infotech, more into the security and the technology services, involved into the policy architecture, and primarily worked in the BFSI sector in India and the Middle East. Looking forward to speak to you guys.
Thanks, Shashank. And as I said, my name is Singh Jaini, and I'm part of the team. And we have been running this for 3.5 years. So prior to that, I've set up. Funny part is that I've set up a PSU bank as well as a private sector bank, and set up banks in US and Europe as well. So diverse. I don't know if it is strange, but yeah, diverse background for sure. We'll quickly go through the deck itself, and maybe I'll set the rules all over again so that simplifies everybody's life. Rule of the game is, if you have a question, you can send it to us on a chat window. We'll respond back to you at the end of the session. Overall session will be around 45 minutes, and after that we've given actually ourselves 45 minutes for Q&A. As the need be, we'll be there for your questions to be responded. We'll basically, so around 15 minutes, we will take session on our side. Then we'll hand it over to Pratyush and to Steve for their guidance. And then last 15 minutes and beyond is primarily for Q&A. If you have any feedback about us, we'll share you the form very soon. You give us your feedback and we'll respond back to you if there is any need. And of course, anybody who gives the feedback will also get our presentation. This has been largely, a lot of people have come back saying that they are looking at our deck. And we'll share the deck back to you if you share your feedback back to us, and we will know that you are really interested, and we'll share it back to you. With this, we start the session right away. Yeah, Shashank, you want to sort of start with?
Yeah, I think I've got.
Yeah.
So I would have just shared that request.
Yeah, please.
Yeah. Thanks, Samir. So in the next couple of minutes, I just talk you about the Digital Fifth. So we have been primarily, as Samir has told, we are into our 4th year, and we are predominantly operating into the digital and fintech space in the BFSI segment, where primarily the 3 core services that we operate into, that consulting, the training, and the partnership. So consulting, we have been mostly operating into the business strategy, where like helping the company to revamp their business strategy, the business roadmap, relook the product strategy, product roadmap, product feature, product enhancement. While on the digital side, it's all about working with complete digital transformation, the digitization of the processes, rebuilding the digital strategy, or building the digital strategy, digital roadmap. So that's, and also in the technology side, that relook the technology landscape, alignment with your business strategy. So that's all area that we work into that. Also, we have been working with our customers on helping them into the security and the compliance aspect with respect to the RBI guidelines, be it on the standards like ISO 27001 kind of things. We have the customer on the defining the policy procedures or doing a kind of gap assessment vis-a-vis the guidelines or the circular, and help the customers to fulfill that on the compliance requirement. One of the key services also we've been working in this space is on to the CTO or the CXO as a services that many of the fintechs and the startups may not have any kind of somebody who drive on the product side or the technology sides or any of the space. We work very closely with the founders and helping them into the building the product stack, doing the program implementation for the platform implementation. So all those kind of the support that we build into that. And as we have been, area of expertise is primarily on the digital, so we be it on the digital strategy, digital transformation, or the digital program management. Open banking, we have been doing lots more around the open banking, be it working with the customers, helping them setting up the neobank, or working with the banks or the financial institutions who guiding onto their API strategy. And we're doing lots of training on the open banking. On the trainings, we are doing lots more on the both the space of the B2C or the B2B. B2C with the critical, some of the key products like on the advanced certification on open banking or the digital lending or the digital banking, the 2 days kind of the programs that we are extensively doing. While also the B2B also we do the curated programs. And the third is more on the partnership where we do trying to work with our partners to help them into the go-to-the-market strategy, help them into the market connects. While at the same time, so other fintechs and the startups, many times they need a kind of the lending partner or the bank partners to connect with them in the business model. So they will be helping to that. Yeah, this is some of the customers that we have been across all consulting or the training or the partnership or the consulting. Like we have been working with NPCI, helping them into set up their API sandbox strategy, as well as the building the API sandbox in kind of the marketplace for the industry, where the APIs from the various API providers will be listed and which will be available for all the end users. Okay, so that's there. We have worked with the Flipkart, the Crisil, the Zaggle, or the EZO is there. While on the institutes also, we have been training on to be it on the NMIMS, on the IM, so on mostly on the fintech course kind of things. Yeah, these are some of our upcoming events. Some of you might be getting our newsletter or some of the communications. And you will have the information in our feedback form also. So this is our, we are coming with our FinTech Bazaar. I'll just talk about the next slide. So what is this? And this is, which is our unique programs around that. We are coming with our 2 days digital lending programs, and it could be, it's one of the unique programs that has been built to purely to address that all the aspects of the digital lending. So that's there. Cybersecurity and also the full to the open banking. I think we will be the one of the only one who will be taking the 2 days program on the open banking. And that's FinTech Bazaar, where just quick introduce like there's a one-on-one speed dating kind of program between the solution provider and the customers, where we try to arrange that the customers, their decision makers around the platform, and make the various solution providers to meet them on a one-on-one basis on a 15 to 20 minutes kind of space. And once they're able to explain to the products, if the alignment is there, then the discussion takes forward. So that's kind of the FinTech Bazaar that we do. And we are coming with the next one on the 5th of November. Again, information will be available on the feedback forms. If you are interested, please suggest. And this is on our training program. So we have these all the listed programs that we keep on coming, and we have the trainings website where that all the information we keep on publishing. We keep on providing this information or the LinkedIn handles also. We are also coming with the last 4 months kind of the programs covering over the entire the digital and the open banking landscape, be it covering with the lending, the banking, the cybersecurity, the compliance, the fintechs, on the technology. So all the aspects that we are trying to cover, it's going to be online and offline kind of the mode of the programs. So that's we are coming, and we'll soon hear the notice. That's all from my side. And Samir, it's over to you.
Thank you. Thank you. I think let's come back to the agenda itself. Primarily, we're looking at, I'll primarily talk about 2 things. One, Indian lending ecosystem, what we are right now focusing upon, and also why data and AI-based decision-making tools are so critical for us, right? So I think by now, everybody would have heard this chart or seen about this chart as well. So the funny incident was that I spoke to him, a particular very senior guy in the market, and he told me that, yeah, people talk about you more like a chart wala guys. So they think of us more like a chart guys, right? So I think we keep explaining what we do, but yeah, I think charts are more famous than we are. One time we had this chart there, I think around 6 months back, and before I could, at the end of the event, I was sending it to my friends, and by that end, we came back. They told me that it's already with them. So this chart primarily is about Indian sort of lending ecosystem, and we obviously released this last version only a couple of weeks back, and the fresh and detailed one is coming very soon, mostly month end, as part of our November report overall. But key point here is that we have added few more layers. For example, a chit fund marketplace is something which we had not added earlier. And also we did not have anything for lease. So we've added these 2 places as well. Some more changes are right now, granular changes are right now happening in this overall ecosystem. But largely, if you look at it, At the bottom, you have banks. Then you have SME-based, MSME-focused lending platforms. Then you have on top, if you look at consumer lending platforms, then you have cards for retail, and they're also getting into SME business. There's a lot of work which is happening on the inclusion side as well. And of course, P2P lending has remained a bit dull, unlike what we expected earlier. We expected it to grow much faster. And on the right side, if you look at it, these are the core platforms which everybody should look at. We have AI analytics platform. We are looking at refresh of this as well. If you think your platform is suitable, please reach out to us. We'll figure out. And then, of course, there is a lot of work which is right now happening around collection side, which is extra critical. But here today, we'll focus on this area, which is we are saying is that there are data providers like AuthBridge, and of course, there are many other data providers in the market as well. And there are, of course, alternate data, a sort of analyzer or a credit platform which sort of do underwriting based on this data, and which is where Lokyata is. So we are basically trying to go area by area. So last time we covered about core platforms. This time we are covering on data providers and underwriting platforms. So that's largely the focus. Now, I think the funny incident I keep hearing is that everybody is looking at availability of data from all the sources, right? Everybody is looking at external sources, open source platform, and then they pick up data and they do some analysis. But we want data freely available, but whatever we create is proprietary. So we have everybody says we have proprietary algorithm by which we consume market data to do all of that. So that's the world we are in. Everybody wants free data from all the sources, but we end up doing proprietary algorithms, which is what we will do, trying to create both of them as we go forward. Yeah. Now, lending is one of the most critical area. I think lending, and of course, on the other side, if you look at it, I do believe that the insurance business is extra sort of complicated. Both these areas need a lot of data, both from sales perspective, also from underwriting perspective, and also from collection perspective. All perspective. Then you have early warning system. So many places where the data usage is required. And the good news is there's a lot of data available. But bad news is that people don't know how to use data. And that's factually correct, because most banks may not be able to figure out how to use data. And only recently we have seen some of them using it really, really well. And of course, too much of data results in a lot of chaos in between. And we have seen so much of loans going haywire. The funny part is that we expect RMs, relationship managers, to figure out how to put data into the early warning system. That's a new generation of platforms coming up, where data is used actually for even early warning system, where data is inserted directly into the early warning system so that the case is created on the real-time basis rather than somebody inputting that case directly. So that's what we see right now in the market. And of course, just few pointers. Basically, we need alternate data. And we always think that alternate data is alternate data, but actually I believe that alternate data at times is the real data. When I say real data, I think let's take an example, right? Let's say if somebody is doing POS transaction, then account statement may not be the real data. POS may be the real data. Transaction may be the real data. GST transactions are real data, right? They are not alternate data. My tax returns are real data, not alternate data. In some sense, I believe that bank account statement is an alternate data. May not be the real data. And of course, more data, better the transparency. That's what we are seeing right now. With each time we see new data coming up, new improvements are happening. There is definitely improvement on the protection side. Book quality is obviously in the current COVID scenario, book quality is very, very critical. And a lot of people are now focusing on it. I think we have seen a lot of PSU banks starting this journey right away. I was with a private bank also in the previous call, and they are also getting into the same journey, which is amazingly good, right? And of course, it is useful from knowing your customers, ensuring that everything is right and controlled. But I think this is at a high level. I've seen very, very few entities. So wherever we consult, we have found very few entities which are able to control this data. I've also seen a lot of data scientists creating model without realizing how it is used in the real life. And these models sometimes are either too scared, right? So they basically don't lend. And a CEO comes back and saying, if you don't let this AI model is not going to lend, what will you do? They throw it out. There's an empathy difference between how humans think and how systems think. So I think we need to bring that sort of data together and the thought process together. With this, I hand it over to Pratyush. ये तो ज्ञान हो गया. अब देखते हैं reality में कैसे होता है. Over to you, Pratyush.
Thanks, Samir. Thanks, really. And thank you for setting up the right context. So good afternoon, everyone, once again. I would just So I'd just like to introduce AuthBridge, where I am the Chief Business Officer. And AuthBridge is India's largest identity management and verification company, which is built on alternate data and technology. So that is where we are, and that is what we are going to talk about. So all of us would agree that the role of data in credit underwriting is most important, considering that currently whatever is the acquisition we are doing currently, whatever underwriting we are doing, there's only one source, which is the traditional data, which is available. But how do we find more and more different sources of data, and how those data and informations can be consumed and processed for the underwriting purposes or even for the customer management purposes? I would request that during the slides, if you guys have any questions, you can actually put it as in the text, and we would try and answer all those questions at the end of the session. Please give your feedback also, so that we can actually get back to you with right set of information if there are any constructive feedback, and we can take care of those feedbacks. Now, this is a part of the overall agenda today. So we are going to talk about the financial inclusion, the problem which most of the global economy is facing. How do we build an alternate data structure? What are the types of alternate data which is available? How do we consume and process this? And then on top of it, how do you make a full data ecosystem, where we can actually process the alternate data, couple this with the traditional data, whatever is available, and then come to the financial inclusion, which is actually expediting the overall process of the financial inclusion. I'm sorry. Let's look at the problem. I'm sorry, I think, yeah. Let's look at the problem, which is globally prevalent, that access to the credit. The credit access is not easy, and the large population worldwide is still underbanked or unbanked. The World Bank keeps on publishing the various types of information in the reports. And as per the latest information, almost 3+ billion people, consumers across the worldwide, is either underbanked or unbanked. Now, out of this, half of the population, which is 1.5 billion, actually belongs to the 7 countries. And if you look at this, the problem is this, that the access to the formal credit is not there, and everybody is trying to make sure that there is a more and more access to the formal credit, which is actually facilitating the financial inclusion and accelerating the economic growth. The key is to make them as part of the financial inclusion and accelerate economic growth. Even if you look at this problem, even from the India perspective, out of 1.3 billion populations, almost 750 to 800 million population is economic active. However, if you really want to go and evaluate that how many consumers are having the credit access, so about 35 to 40% of the people are having the credit access. Now we can see that there is a huge gap within India as well. Now this gap is primarily because there is a lack of data availability, there's a lack of information about those set of consumers, and obviously the lending institutions are not able to process those cases and provide the right type of product offerings, or maybe check the credit worthiness of those consumers. So I think this becomes a very, very important point, that we need to look at the data which is beyond the traditional, and there are non-traditional way, and where we can go and collect the information from the different sources. Now, in the recent past, a lot of technology company has come and they have built a technology, and they are processing the data based on the advanced analytics, and they are trying to cater to these segments. Some of them have been successful, but I think most of them have really been trying to figure out that what is the best way to consume and process this data. And I think that's where we are going to talk about what are the data which is available, and how should we really build a full ecosystem around this system, so that we can process and we can get the consumer credit worthiness in more deeper way and underwrite them with the right set of the offerings from the financial sector. Now, there are various ways to accelerate the financial inclusion. In fact, a lot of lenders have come and they have started providing and customizing customer-centric products. They are doing a lot of innovation in terms of providing the products. They are building different ways of underwriting these consumers. However, the problem still remains. While they are building these access points, they are building this better financial infrastructure, they are providing these different types of product, but the problem remains the same, how do they underwrite so that the right set of customers can be mapped with the right offerings and the exact financial product which is in the need can be actually offered to these customers. And I think that's the problem statement which we are trying to solve through the alternate data, and how do we use this alternate data and process this so that lenders or even the insurance company or even the e-commerce companies are able to, they're able to in fact process these consumers and provide the right set of unique needs for these consumers, right? Even the government has come up and they are providing a lot of legal and regulatory framework. Based on this legal and regulatory framework and enabling the lending institutions, there is a lot of commitment from the public and private sector banks and the private institutions, NBFCs, the fintech companies. But I think the problem area where everybody is struggling is the how to really understand and estimate and establish the identity, intent, and capacity of these consumers and really offer them the unique products which is required, and as and when required, immediately those solutions can be provided. I think that's where the financial inclusion comes into the play. And this is the way alternate data is coming into the picture, where more and more organizations are moving towards processing of the alternate data instead of the traditional data. Now, what are these alternate data? So there are two types of alternate data. And basically before that, getting into the types of the data, I think we must define what is this alternative data which is available and what is the definition of this alternative data. I think alternative data has had many definitions in the past, but slowly by the use of these various sources of information and the use of these various variables, there is a structured way of defining this alternate data. The International Committee of Credit, the International Committee of Credit Reporting, they have defined this alternative data, that any data which is available for processing in a digital form and really not the traditional data, I think that data is considered as an alternate data. And if you look at in the perspective of this alternate data, the mobile internet usage of the customers, the usage of the electricity, the usage of the utilities, the usage of social footprinting, the usage of digital footprinting, where all the customer is going, what all shopping is doing online. I think these are all the part of the entire alternate data ecosystem. Now, for the ease of perspective, I think we have to define this into two different ways. One is the structured and second is the unstructured. Now, structured data is available where actually you get the right set of information, and there is a little bit of effort which is required to curate this information and actually process to arrive at what exactly you are looking at. But there are a lot of unstructured data, which is the social media footprint, internet usage, email, text messages, etc., etc. I think these are the set of the information which is available as a part of the unstructured data. Now, what is happening in this entire underwriting process and our acquisition process, all this structured and unstructured data is being looked upon by all the lenders, even in the insurance, even in the telecom sectors. The way they are looking at it is that all this data comes from a different sources, and all this data on top of it, there has to be an advanced analytics and the machine learning, which is actually leading to the multi-data score or maybe a different credit modeling. These credit models are actually helping the financial institutions in underwriting and portfolio management. And that's actually expediting the entire financial services. So these different set of data is actually coming from a different sources. However, one need to understand that what exactly is required after even collecting these information. It's not only important to collect these information. I think the most important thing is that how do you collect, how do you curate, and what kind of an analytics and AI and ML you are using on top of this actually to come out with the right set of inferences, because there are a lot of hidden pattern within this data. There's a lot of information which is available, and there has to be systematic bias which has to be removed before you actually come out and you figure out that these data can be used as a part of the overall underwriting and acquisition processes. Okay, let's move on to the what kind of and what level of data is available. So for lending institutions, all data is a credit data, whether it is a financial data or whether it is an alternate data. Now, I have tried to explain and project it here two ways. One is that what level of data and what level of information which is available. and how one should use this information for the credit underwriting and for even for the portfolio management and for the acquisition purposes. Okay, so one level of data is the financial accounting data. I think most of us are aware that this data is already available, and largely these informations are available from the customer side, or even if you want to go to the credit bureau, you can actually get these information. These are the transaction level information which is available. You know the historical repayment track, you know how has been the pattern of the payment, you know what kind of an exposure has been taken on the customers. However, once you don't get this information, and as I mentioned in the initial beginning, that there is a gap between the economic active and actual customer who have the access to the credit, there's a huge gap. Now, that is a set of information, that is a set of customers where everybody is trying to reach out. And however, to find out that what information is available and what surrogate information or a data point can be used to make sure that we do the right appropriate underwriting and get a deeper insight of the customer and actually map what is his requirement versus what is the offering in the industry. All right. So then there is a next level of data, which is the level 2 data. And these are actually the payment data, which is the bill payment data. Now you look at some of the examples are mentioned here. There are utilities bills, there are electricity bill, there are water bills, there are phone bills which is being paid, DTH, cable, rental, GST. I think these are the information which is the second level of data. Now the level 2 data is among the most, in my view, among the most reliable alternative data source, because this actually tells you the monthly spend patterns. This provides the spending pattern, and this provides the consistent behavior of the customer, and also you get to know about the financial discipline of the customer. So if there are electricity bill and the payments are made on a regular time, or say in a particular period or a particular timeline, I think these are the things which are establishing the credential of those customers. Now, there are two ways to use this level 2 data. One, you actually process this information in the absolute manner, or you maybe couple this with the level 1 information if it is available. And I think that's where most of the organization and the lending institutions have started using this. However, there are still a large population where level 1 data is not available. And how do we ensure that the different level of data which can be used to underwrite the customer and actually create that entire processing more seamless and faster underwriting, so that you can also provide the solution to these customers. Now, even if the level 2 data does not help, then there is a next level of data, which is the level 3 data, which is the next level of data. And these are the non-financial data. Now, some of the examples which we have mentioned is that there are educational details, there are employment details, there are retail purchase information, social networking, psychometric survey. So some of the organizations have come forward and they have started using the psychometric survey just to assess the customer behavior, customer thought process, customer lifestyle choices, and maybe the spending pattern. So this level of data becomes very, very important when you don't get the information at the level 1 data. And I think these are some of the examples I have tried to put together here, but there are a list of various data which can be consumed. So level 3 data is generally used for determining, or it indicates a lot about the customer behavior, lifestyle choices, and spending pattern. So if you club this with a level 2 data, which is a financial discipline also, if you don't have the level 1 information, I think between level 2 and level 3, you are able to get a full 360 view of the customers, and it becomes easier for somebody to underwrite and provide the different kind of an offerings, which may be a small ticket personal loan, which may be a payday loan, which may be a revolving credit, or which may be any other a product which the financial institutions are coming forward with. And there are a lot of even government schemes which is being run in a different states at a pan-India basis. All these schemes, whenever there are schemes coming up, I think there are one issue which everybody is trying to face, is that these are the different segments who does not have access to the credit. Now, all the lending institutions wants to participate in this, but the problem is, how do we underwrite and what kind of a risk we need to take, what kind of a price we need to build on that risk? I think that's the important question which everybody is trying to solve for. There comes the use of these alternate data, which is actually providing the different side of information and the deep understanding of customers. Now, does it mean that spotlight is on the alternative data, but that's it? No, the answer is no. You need to create a very solid, robust alternate data ecosystem. And I think that ecosystem is going to help you in terms of whenever you want to use this data. So data accuracy and data correctness is the utmost important. One need to ensure that there is a compliant way of using this. So these are the regulatory approved for the lending ecosystem, that there has to be a depth and the breadth of the data sources. So the data has to have some history. These data has to be utilized for some kind of a predictive analysis. And obviously this should fit and give some kind of additive value. So getting the information is one piece, but creating this entire ecosystem so that you can collect these information, curate this information, process this information, and consume it is the most important. And I think not only collecting these information from the various data sources is important, the most important is that once you collect the information, how do you really consume it? How do you build up advanced analytics, machine learning, AI on top of it, just to curate and process this information and then consume the right inference as a part of the overall acquisition process or say underwriting strategy. Now, these are the information and the advantages which one should have whenever you are using the alternative data sources and you are collecting various sources of this data from the various sources. Now, once you collect these information, actually you are able to really address the challenge what we are facing today. And I think when I said that about 1.5 billion people plus people have not having the credit access, India is among the top 3 countries. Now, how do we address this? How do we accelerate the entire financial inclusion? These are the various sources and these are the various ways of data sets which is available. The moment we start using and consuming it in an appropriate way, that is where we are able to address the new to credit, where they do not have any footprint on the credit. People who are unbanked, so psychometric and social network data comes into the play, and actually the unbanked customer can be brought to the financial inclusion. There are people who have taken some kind of a funding or say credit in the past, but however they have not been able to kind of actively taking the credit in the recent past, so they may face the problem. So then there is a newer source of information which is available, which is the digital data footprint which is available, because there's a lot of internet users, there's a lot of mobile users which is actually increasing day by day, and those informations are available and those informations are going to be used. Now, one of the key points I want to make it here is that while there has been always a focus on the data and even the alternate source of the data, but considering the current global crisis, when various sectors are really facing the challenge of uncertainty, I think the financial services are really pulling themselves and realigning themselves and coming back forward and adapting this new way of using various digital sources, digital data which is available, and start processing it to underwrite the customer and providing the solution. I would not like to leave this point that collecting this information is important, but collecting this information and putting and investing further in AI and ML and analytics, advanced analytics, to provide the outcome of this information is very, very important. And I think one must really look at not only collecting these set of information, but also processing and how do you really consume this set of the information. And my co-presenter, Steve, will talk about more in the next session. So thank you so much. Over to you, Steve.
Thanks, Pratyush, for that deep insights. And I also personally learned a lot in this session. So this is good. Just one feedback to everybody who's joined the session. Please share your feedback back to us. I know a lot of questions are coming. We already had, I think, 15 odd questions. Please share your questions. I hope by now you would have the feedback form already available with you. So please start giving that feedback back to us. It'll really help us in improving the quality of our next webinar or knowledge session. As I said earlier too, those who give us feedback, we'll share the deck back to them as an email back to them. So everybody who is giving us feedback will also get in return the document itself of what we are presenting today. So with this, I hand it over back to Steve. I think, Steve, you have been sort of guiding me on all the details on AIML. Every time I listen, I get new insights. So thank you for joining, and over to you.
Yeah, thank you very much. And thank you, Pratyush. Yeah, that was a great overview on how to use alternative data and the importance of alternative data in the decisioning process and better understanding customers. So Lokyata is a company that develops lending decision platforms, and we manage them as a service. And really, we leverage any and all data for scoring, underwriting, and also customer profile analytics. So really, you know, when we gather all of this data, the way we gather it is really built around a data strategy. And what we're trying to do is grow the lifetime value of the customer by knowing more about them. And so, you know, you may start with data today that you're going to use for underwriting, but you want to make space in your data strategy for new data that will become available. So, you know, AuthBridge being very plugged into the data environment in India will know the types of data that could be available in the future, even if they're not available today, and how you might use them. And so you want to make room for that. So you'll also want to look at historical data sources that the bank already has that has some outcomes. You also might want to look at data partnerships, and AuthBridge is a perfect example of a data partnership. And then the last part of that is the data process flow. And, you know, so you want to be able to gather the data, but you need to have consistent, clean, and accurate data that is formatted properly to be consumed by the AI and ML platform to make consistent lending decisions. And the data strategy really supports business goals. And so for every bank, there, you know, banks and other lenders have business goals that they have for their portfolio or for particular loan products. And so available capital, risk tolerance, product and client segments, regulatory constraints are all important when it comes to building an AI and ML underwriting system. So this is an interesting slide, and it really, you know, is the heart of the power of AI and ML. So if you look at traditional scoring techniques, you're going to look at variables from different sources and then either use business rules or statistical regression to generate some kind of a decision and a score. When you're using AI and ML, it is so powerful that you can take those raw variables and you can combine them programmatically. So you can take what might be 20 or 30 variables and turn them into hundreds of variables. You might be able to take 100 variables and turn them into thousands. And while those variables individually may not have a lot of predictive power, once you combine them into what are called features, then they could have predictive value. And so using automated tooling to create these feature sets and then train models and then evaluate that output is how you get to a good working AI model for underwriting and scoring. Oops. So, you know, scoring really is only one element of a lending decision. And, you know, when a lot of people, I think, have a misconception about AI and ML, that you're going to throw some data at it, it's going to train a model, and then it's just going to go off on its own. And it's going to base every decision solely on what the model was trained to do. But really, the scoring model itself is only one element of a lending decision. The business rules are very, very critical. So you want to take that AI scoring model and you want to apply it to your business and be able to use that score to best serve your customers and also achieve the business goals of the bank. So business rules particularly could be, you know, what's the grantable amount going to be? How are we going to do fraud prevention? What is the range of interest rates? Are we going to do risk-based pricing, or are they fixed interest rates? Are we going to have 2 or 3 interest rates based on risk buckets? And then on top of that, you can layer a set of policies where, given a certain score and then a certain set of business rules, you might actually want to override those with some policies to achieve a specific outcome. And so an example of a specific outcome might be farmers in a particular area this year were hit by a typhoon, and all the maize was destroyed in 2 or 3 pin codes. When the farmer comes back to borrow next year, he may have been late on his payments, but because you know that farmers in that area had a problem, you could actually generate a policy that overrides the scoring model and the business rules to provide a higher loan than that farmer would otherwise be eligible for. So I think the point here is that AI doesn't really replace business expertise and in the lending institution. When we're building AI models and we're gathering data through alternative data sources and also looking at data that the bank has, it really, we lean heavily on the expertise of the people in the bank to help us understand exactly what that data means, because it is very critical to understand exactly what it means and how to apply it so that we label it correctly as we're going through the model training. I think another important point too is that machine learning and AI doesn't have to be just a rip and replace project. You don't have to take an existing working underwriting model that's producing reasonable results and just tear it out and replace it with AI and ML. What you can do is take that existing model and then augment it with this new alternative data and an AI ML scoring model. So you're still leveraging something that's working, adding something new to provide an incremental improvement, and then start lending with it. And then you monitor the performance of the portfolio and the performance of these lending models in real time using monitoring tools, and watch it and make sure that it's operating and producing outcomes that are expected. And then as time passes and you get more outcomes, then you can retrain the model and then start to bias it more toward AI and ML and less toward the business rule, the previous business rules. And ultimately you could end up with a full AI ML scoring model, then plus a set of business rules and policies. Now, another thing about AI that gives people concern is that it's a black box. And, modern AI technology really allows us to understand how decisions were made. And it's important because it enables fair and responsible lending. AI provides an objective view of the data, but it's going to make decisions based on what is in the data. So these transparency techniques are used at the model level to explain how the model works and to predict how the model will work. And then it's also implemented at the loan level so that you can see exactly how every decision was made. And then you can validate that through integrated reporting and analytics. And so we design the model, we create a prediction of how we think the model is going to work. We implement the model and we operate it, and we produce decisions produce transparency information for every decision, and then we validate it through analytics. Oops, come on. So, here's an example of how that transparency works and and the power of AI. So what we're looking at here is a customer profile of a sample MSME client. And if you look at this star graph, you'll see each of these different dimensions that the user is being scored across. And AI and ML allows you to really take a deep view of the data and analyze it and be able to create these very distinct scores across these different dimensions. And so when you compare one MSME to another, their graphs may be quite different, but they could also be approved based on the overall combination of that score. This is important because in addition to just being able to approve somebody for a loan, you really want to understand more about them. You want to understand, you want to build a customer profile that lets you serve the customer better so that the customer stays with you longer and you're growing lifetime value, and that you can cross-sell and upsell and make recommendations to them. So the second half then of the scoring process, or the underwriting process, that I've talked about is the transparency. So if you look at this, what we're seeing here are, on the right, the effect each of these variables had toward that had a positive effect on the lending decision. And then on the left in red, we have the ones that had a negative effect. And this information is provided for every lending decision, and it's done in real time. This is done in less than 1 second. And this data is returned back to the LOS. It can be used for hyper-personalized customer engagement. It can be stored and then used for customer segmentation and reporting that you use to drive marketing, or use to drive other cross-sell and upsell type activities, or even used for collection type activities. And this is what the model level transparency looks like. So the previous slide was what a loan level decision transparency looks like. Here, this data can be generated and then used to help the risk team understand how the model is made. And it's all about model governance. As an institution, you are compelled by the regulatory bodies to understand how your models work and provide some documentation. And so this is the kind of documentation that can be produced to show how the models work. Now, these are approximate models that show, approximate weightages for each of these different variables or sets of variables. And, but what we'll do is, over time, we'll measure this against actual outcomes to make sure that the model is operating as expected. And that is done through portfolio performance monitoring. And so we'll do, we have a monitoring system connected to the scoring and lending decision system, and it's generating portfolio analytics. And so you get some of the basic analytics of, portfolio growth by customers, portfolio growth by revenue. You can also get portfolio disbursements, and then those disbursements with your PAR buckets layered on top. We also are looking here on this bottom left. These are weekly disbursements with your bad rates at the DPD 1, DPD 15, and DPD 30 levels overlaid and synchronized on top of them. And then you can also look at financial margin. So if the system knows what your cost of capital is and how you provision and your interest rates, the amount of data that the AI system has collected will allow you to create financial margin graphs as well as financial margin forecasts. And then another aspect really, and this is around fair lending, is my model lending appropriately, and is it meeting my KPIs? And these KPIs here are based around caste and religion and other demographic aspects. But these same kinds of graphs can be fed real time by the underwriting system, and then alerts set so that if anything goes outside the expected or accepted range, then you can send an alert that then you could go and take a look and see what's happening. And then these are, this data along with the outcomes data that we collect from the borrowers that are repaying will be used over time to retrain those models and incrementally improve them. And the idea really is to continually progress toward business goals. No underwriting model is perfect, but every underwriting model can be improved over time by analyzing the outcomes. And in addition to that, you can also look at changes in customer behavior and changes in environmental conditions that can affect customer behavior, and also integrate those changes into the scoring model again, to make sure that it continues to progress toward business goals. And in conclusion, AI and ML it's a powerful tool for evaluating lots of data to support your underwriting decisions. And in addition to underwriting decisions, it's also about, again, building a wide and rich customer profile so you can understand your customers better, to serve them better. The data strategy and the data acquisition is central to building deeper customer understanding, understanding the data, building a process for obtaining the data, organizing it and formatting it appropriately, and then feeding it into the ML AI engine in a real time or a batch scoring process is also critical. And the last, I think, most important thing is the journey to AI can be evolutionary rather than rip and replace. You can start with what you have today that is working, and then add to it, and then eventually over time, fully depend on AI and ML for your lending decisions. So thank you very much. And we're happy to take questions at the, through the chat window.
Absolutely. I think it has been mesmerizing to hear both of you speaking. I think we have, I think, almost all of them already available all through. So we have a record audience here. What I will do is the questions are still coming in. And we have time. Okay, so personally, I have taken commitment from everybody, including Steve, Pratyush, as well as Shashank, that we are here for a long time. So we are here for next maybe 30 odd minutes for sure. So let the questions start. And quick pointer from my side is, please, there's a feedback form which is available. Please provide your feedback. We'll reach out to you if you need us to reach out to you. And of course, if all those who will give feedback will respond back with the deck itself back to you. That will be useful as well for you. So I think with this, I think it'll be tough for me to identify questions. There are so many of them. I think the first question is from Siddhartha Kumar Nelapudi, and he's saying that is alternate data providers vendors available in the ecosystem? I think the answer is yes. If you look at our ecosystem slide, which we regularly publish, we will also be part of the deck. AuthBridge and in the country, there are maybe many more providers, maybe 5 to 6 more providers available in the market from where you can pick up data. Beyond, and these are all big aggregators. There will still be more data available in the market. You may have to pick them up specifically from those specific targets. So I would say 90% of your needs will be met by these data aggregators who have data from multiple sources. And there'll be some data incrementally you are looking at. Maybe you need to tie up with a specific source of data. For example, if you are doing milk-based servicing, right, and you are giving to a milk farmer, or maybe you want to give it to a farmer himself, you need to figure out the seed data and the environment data and some other data, which is very specific, that you need to pick up from that ecosystem. So I think it's I would say 90% from the same source, and then rest 10% can come from incremental source which you are looking at. So that's the pointer. Let's move to the next one. And Shashank, can you just give the feedback form back to the group so that everybody can have a look at it? In the meantime, I'll continue to go for it. So I think next question is from Namrata. It'll be useful if Namrata, you can quickly introduce yourself and ask your question right away. Because if I start reading it, I'll lose time, and I don't want anybody to lose time on it. All of your time is very, very valuable. So if you're there, Namrata, you can ask your question. Namrata Shah.
Hi Samir, hi Pratyush, hi Stephen. My name is Namrata Shah. I'm from TransUnion, Sibyl. And my question was to Pratyush, and I wanted to understand that while we discuss the alternate data sources, which can help us in validating or authenticating a customer, a lead prospect from multiple data sources, from GST or various data sources. But how would you identify the need to have the right lending product in that prospect? So how do you assess the need in the prospect? That's my question. Thank you.
Yeah, a good question. And I think this need thing is not really outcome of processing of the alternate data. I think it's a combination of the traditional data and the alternate data. So basically, if I have to divide this, that how do we use and what kind of a usage can be? One is that you obviously, if you're talking about the GST, etc., I think those are the surrogates for where you are really establishing the capacity or the capability of repaying the loan. But the need is actually, you'll have to look at the combination of these alternate data along with the traditional data. So what kind of a credit history the customer is having, what kind of a lending pattern he is following, and then what is the business pattern which is actually getting reflected through the GST or say some other surrogate things. And then you can actually build that there is a need for the customer, that he has been into this business, this has been his turnover, or this has been his spending pattern on the different financial products. Maybe we need to build an analytics on top of it and figuring it out that this in this ecosystem, this is the way the pattern looks like, and maybe he would be in the need. While this is slightly easier when you're doing for the individual consumers, slightly difficult and I would say tactical when you're doing it for the SMEs. So that's the way you can actually correlate this entire thing.
Thank you. Thanks, Pratyush.
Yeah, thank you. Thank you, Namrata, for your question. Then we have next question from Trisha Bansal. Trisha Bansal, can you ask a question, please? I suppose she's not there. I think, let me ask a question because it was very useful and simple one. The question was, what about the first-time borrower? At level 1, the data is not available largely for a first-time borrower. How do you go about giving loan to those guys who are maybe first-time borrowers, right, for FTB?
Yeah, so I'll answer it in a very simplistic way. If you don't have the traditional data which is available, I think you can take the surrogate, and there are a lot of analytics on top of alternate data and the traditional data which is already available. So you can actually do the lookalike portfolio in terms of segmenting your risk. That's number one. However, in terms of the ability to pay, I think most important thing is that how do you establish the financial discipline and the behavior of the customer. So level 2 data and the level 3 data is definitely going to be useful. While new to credit might not have very good footprint on the level 3 data, but level 2 data is certainly would be there. The customer might be using the phone, the customer might be paying the electricity bill, water bill, etc. And I think the pattern of those repayments and the usage consumption pattern would definitely provide a surrogate to really figure out that what's the ability of this customer to repay the loan.
Yeah, thank you, Pratyush. I think I went offline. So continuing with this question only. So for level 2, it seems to be more of individual specific data. So, the data points are more of individual specific. So let's consider a point wherein level 1 is not available. So there is this SME, which is there borrowing for the first time. So level 1 is not there. Level 2, because it's a SME. So, utilitarian data may not be that much of help to us. So how do we go about it?
So is this question specific to the SME you're talking about? I think, Trisha.
Yeah, SME or MSME or even a, medium-sized corporate also. So anybody who's a, borrower for the first time and may not be having a digital footprint in terms of social media and all.
Yeah. So while when I have actually shown this a level 2 or level 3 data, there are various other data points which is also available, and maybe we can discuss it offline in terms of giving those data points. But to answer your question, it also depends on what's the strategy for the lenders, and they really want to underwrite these kind of a customer who does not have footprint on the credit side, but they want to process through alternate data. And if the segment which is being addressed are actually based on some kind of a business, I think the credibility what we need to establish is that whether he has the capacity to repay the loan. And then there can be various surrogates. While these data is digital footprint, etc., is not available, but some turnover, some electricity bill, some other information which would be available. And I think when you look at the alternate data sources which is available, so some data sources are available where actually you can take it based on the lender declaration, but there are some specific data which you can actually take once the customer consent for that. And that consent can be even for the mobile data information, or maybe if you go a little further, I think in the SME it would not be of a great use, but we can still look at that if there are some ways to define the psychometric way of assessing that what is his capacity to repay and what is his behavior to repay. And I think that's a critical thing which you would like to establish before you give the loan to even the small time MSME.
Thank you, Pratyush. I think next question is very specific, and maybe Shashank, this is for you. The question is about, Shashank, you there?
Yeah, Samir, I'm there.
Yeah, the question is that what are the implications of India's data privacy bill on such alternate data? So Shashank is an expert on security side and privacy side. So over to you, Shashank.
Yeah, Samir. So if you look at it, personal data protection bill. So whatever all the alternate data which is there, which can be used to identify any individual, will fall into your category of the personal data protection bill. So that's where the entire guidelines of the providing the security, the consent management, which is on which the data architecture is built on. So all this gets applicable, and since it's around the corner, it will be applicable. Now there is an alternate guidelines also already under the process of Ministry of Information Technology. You would, I don't know whether you got a chance to look at it, which is also talking about the guidelines for the non-personal data, where the majority of the other alternate data may be falling into that category. So there's a whole suite of the guidelines also being planned for the handling the non-personal data. But while on the PDP, it's purely talk about all the personal identified information. Yes, it doesn't take care of the anonymized data. So if you are analyzing the data and it's being used as an anonymized data, it doesn't apply to that. So that's at the broader level the way PDP will be applicable.
Okay, thank you. Thank you. So next question is from James. James, you want to ask your question, please? James Bob. James, you want to ask your question? Okay, the question is very long. If I were to ask, it'll take me 2 minutes to figure out what the question was. So I'm just being very wary of it. So next question is from Satish. Satish, you want to ask your question, please?
Yes, I can ask.
Yeah, go ahead.
Okay, I just want to understand, like, due to
Satish, it would be good if you could put your video on and maybe a quick background of yourself so that we can understand the context.
See, the cam is not working, so I can maybe explain about myself.
Yeah.
I'm Dr. Satish, working as a global head for transformation and innovation, and specific to A and RPA at EY. Okay. My question is, due to the fintech disruption, what changes you can expect in the future lending process, and how it looks like in future? The current traditional process, people are working on putting AI and ML models and various things for the existing process. But I'm thinking about the future process where these are not even required. It will be either a part of the product which is built in, which I presume, and how it looks like is my question.
So I can take this question and maybe try and attempt answering this. So I think in my view, and I'm purely coming from, I think this question is more of a macro in nature. So I'm coming from my background on the lending side. I think future would look like that. One, most of these lenders will move to the direct to consumer business. And obviously, so one thing is that the more and more you're going digital, the lenders will have a direct contact with the consumer. I think it would be a more of a self-serve journey. So in terms of the digital process of acquisition, I think there's a lot of revolution which will happen. That's number one. In terms of the financial product, if I have to talk about, I think this is more of a, every consumer is looking for now, not a different types of loan. And I touched upon this point is that alternate data is also providing you a power to create some financial solution which is unique to the customers. And I think this is where the entire industry is moving. So lending as a spending. So you need a spending power basically. And once you need the spending power, you are going and borrowing fund from different lending institutions. While there are something which is largely on the retail asset side, but there are large portion of this and the population who is going for the unsecured lending. And if you look at combine those small ticket loans or say unsecured lending and combine this entire thing and look at that out of overpopulation or say over loans, whatever happens in the industry, this would constitute so about 70%. So everybody is looking for a power of spending, and then there has to be in the background there has to be a lending which has to be linked. So I think lending as a spending is going to change, and that's the way the product would come. Second is that more of our customers will be coming on the digital mode. So it's a direct to consumer business rather than having a channels in the branches and etc. I think these are two things which I look at personally, that things will change and the dynamics will change, especially considering that now it's a lot of digital footprint which is available from most of the customers.
I
So in
think
that case, sorry.
Okay. I was going to say I would add to that there will be a move toward embedded fintech, where financial products are actually embedded into the product that consumers and businesses are buying. And so there will be kind of less, it'll be less of a two-step thing and a one-step thing. You just go to buy it, and then the loan is automatically already built into the product that you're buying. And we're already starting to see that some in the US.
I think that's happening across the country as well. It's largely the segment is becoming larger than anything else. Everybody is trying to become, and an OKN framework or is also in that same line, right? Anybody who has customer base should be able to sort of lend to his customer rather than looking one more partner community and increase the complexity.
Right.
And adding to my question, is it the omni banking, omni channel, or open banking, which will be the solution to meet the customer, like to have a better association with the customer compared to the current system?
I think omni-channel or open banking, the frameworks are common, right? Largely, you're saying that customer is going to come from the channel of his choice, and we need to be able to service. So I think maybe Satish, we can have a chat, because Shashank is primarily focused on open banking framework, and we can discuss specifically on that. I'm just being conscious of that time, if that is okay with you, Satish.
No problem. Thank you.
Thank you, Satish. Thank you. The next question is from Kalinga. Kalinga Murlik.
Hey, my name is Kalinga. I work for Yardley, which is a financial data aggregator. I'm in a product space. My question is about the alternate data usage. Is there, particularly for credit lending, is there any framework or common understanding or common standard? Because I'm just trying to correlate with the subprime crisis a decade ago. Like if the decision of creditworthiness derivation is left to company, and what happens, it's a boom kind of thing. So is there any common framework available for usage of this alternate data?
No, I think reality is in the country, there's nothing like this available. I think the credit calls are credit calls from each of these entities. Of course, different segments operate at different levels. Banks operate at different level. NBFCs operate at different level. And each one of them have a different risk appetite. I think what is happening is that fintechs primarily are sort of taking a bigger risk here and sort of creating a slightly next level of iteration to it. So there's a segment which were never touched by bank, these guys are touching. So I think if common framework is established, I think the risk levels will come down or maybe at the same level. So I think we are far away from it. Other than the fact that you have a bureaus and given some score, rest all is really not there. And I've seen lenders and fintechs who don't even look at the bureau score before they give loans, and they're very sure about it. Their framework is that they look at alternate data, and they're saying alternate data is let's say POS data, and they don't care about anything else. And when you look at the real world, maybe let's say if you're giving somebody money against the seeds, he's not going to run away from his farm, right? So you need to take contextual one. Again, I would leave the thread here, but I think in the country, there's nothing like this which exists. And I also believe that nothing like this will exist also for a long time to come, because every money is different. Every lender is different, and everybody has a different appetite. The RBI regulations will still remain to ensure that nobody has NPA and the capital is there. But RBI never says that you can't have NPA. They're saying that you have to have capital for disbursement, right? So that's what they're saying. So I think that's where the country will continue to be in that direction.
Thank you.
Yeah. I think the next question is from, just one sec. I think there are far too many questions. Mike, you want to ask your question, please? And just one sec before to all of you, please keep giving us feedback. I think we've got very few feedback till now. I think maybe 20-25 till now. So request is everybody could give us feedback. And as usual, we will send you the document as well, whatever we presented. So over to you, Mayank.
Yeah, hi everyone. My name is Mayank. I work as the program lead for microfinance vertical as a subset of NBFCs. Primarily, I'm part of a brand whose portfolio is sold to end members, and these are people in villages, towns, and semi-urban locations. whenever the first time borrower is onboarded, they obviously do it based on surrogate data. The number of, for example, what is the cooking range they have, what are the kind of washing machine that they are using, if at all. So that is obviously alternate and surrogate data. But I want to understand, let's say once the person is in the system, how much of a role does the credit bureau rating then play for a second time borrower? So once he's in the system, in your particular AI models, how much does that factor count in whenever you're giving that loan again to the second time borrower? Does that credit bureau still score still count, or would you still depend on surrogate alternate data?
We will use all of the data still, but behavioral data is generally has the most weight. So typically the platform is integrated with the loan origination system or the core banking system. So all of that behavior data comes back to us as a daily batch or in real time. And so every day we're reprocessing everybody's profile and generating new scores for them. And what we have found is that generally behavioral data is the most predictive of future data or future behavior, but we still want to keep looking at other data as well. Again, we're trying to widen that profile over time. And so changes in their bureau data, changes in the alternate data, changes in their bill payment behavior, I think are still important. Another aspect of it too is, continually evaluating the predictive power of all of these different data elements and bringing new ones in and taking other ones out based on their predictive power for a particular segment or a particular region. The other thing about bureau data too is that there are liabilities, external liabilities that show up that you wouldn't see in the alternate data necessarily, and you wouldn't see in the behavioral data. So, if they're in the bureau and they're, and they have taken out another loan or something, then you would know about that, which could affect their capacity.
Yeah. Okay.
Thanks, Steve.
Thanks, Mayank. Thanks, Steve. So next question is from Ramakrishnan. Ramakrishnan, please, you can ask your question, please.
Hi, my name is Ram. I work for a fintech company based out of the Middle East, and we are primarily into CRM-based lending solutions. Our platform is built on the Microsoft Dynamics CRM solution. One of my questions was to understand how does Lokyata's platform, would it seamlessly integrate with, let's say, a solution provider like Microsoft? How much of work is really needed to do that? And how that AI and modeling solution can transform loan origination itself?
Yeah, that's a great question. So the Lokyata platform is all API based, and it uses JSON documents generally, although it'll support XML, and it's very straightforward to integrate. It can also connect to, so it could connect to AuthBridge, for instance, connect to an external data source, and then pull in that external data to use as well. So what we would do is work with you to understand what your data looks like that's coming out of Microsoft Dynamics for your particular customer, see what historical data is and do some analysis there, and then look at data that's available in the market. We have what we call a common data model, which is a modular data model that allows us to uniquely identify each of the data points that we see in a typical lending operation. And that translates into a modular scoring model as well. So we can basically, mix and match parts of it to build out the scoring model. And then ultimately, if your customer has outcomes, we'll train the initial scoring model based on their outcomes, and then take a data strategy approach to deciding which data we're going to collect, and then start evaluating for its predictive power.
Thank you. Yeah. Thank you. Thanks a lot.
Thank you. So the next question is from Dave. Dave, you want to ask your question, please? Okay. If not, he's not there, then Atul Srivastav. Atul, you want to ask your question, please? Okay. I guess I may have missed on some. I think there are 30-40 more questions. I'm not able to scroll through. So I'll open the forum for anybody to ask any question, and we'll try to respond. We have already breached the time, and I can see almost 75 people are still there. So I'm not trying to run away. We still have time. 10 more minutes or maybe 5 more minutes. Please go ahead and ask your question. Anybody who want to ask a question, just raise your hands right away, and we'll bring it back to you. Yeah. I think since nobody has picked up the question till now, only Trisha has done it. Trisha, you can ask your question, and in between anybody else has a question, please ask your question. And I also please keep giving us feedback. That will be very useful.
Thank you, Samir. So just to quickly introduce, I'm Amit Agarwal. I am part of ICICI Bank. So wrongly I have mentioned my wife's name. It's auto captured here. So anyhow, for the level 2 social media capturing and this alternate data, in India, I have been specifically seeing that there are people who use multi Facebook IDs or maybe things like that. So mobile phones maybe. So Samir's mobile phone maybe in his wife's name or things like that. So how do we track the genuinity of this level 2 data in terms of specific to the countries like India and all, wherein people do not have a discipline to have a single Google ID or maybe Facebook ID or maybe having a mobile phone in their own name and all.
Pratyush, you want to take it?
Yeah, I can take it. So look, social media data is obviously this is not an authenticated data, and you really cannot take it on the face value. Obviously, there has to be a triangulation of these data points with the other set of data. So that's one piece. Now coming back to that, how do we ensure that these alternative data, even if this is not a social media data, how do you really ensure that this is the right data and it belongs to the customer? As I said, once you establish that the identity of the customer and you're really moving on towards further analysis and say underwriting process, you are collecting these alternative data, which has to be triangulated with the other set of declared information, other set of information which is available on some reliable sources, and there has to be a cross match, there has to be a triangulation, there has to be a bit of on top of it consider the consistency, etc., and then you come out with the inferences. So when we are providing these alternate data, and this problem we face every day, so as an AuthBridge, when we provide this data, what we do is that there has to be triangulation between the various data points. So somebody claims that this is their employment detail, and you go to the LinkedIn, you really find the same employment detail. But actually, when you go back and check the education record, you figure out that the experience is not matching. If a person has done the BTech on a particular year, X year, and his total experience is 10 years, but you're triangulating this information from the experience which the customer is claiming. So taking this information and I mentioned this during my session also, and Steve has also mentioned, collecting these information and then curating this information and really building an advanced analytics and figuring out the hidden patterns, removing those biases, and then coming to the final conclusion is most important thing. While this information is available, and we can actually have a separate discussion about this, because we can present some of the best practices which is happening. How do you really validate these information which is available on the social media platform?
Thanks, Pratyush. So just a few pointers. We have an event coming up which is on 5th, which is Fintech Bazaar. Anybody who's interested in meeting Lokyata, AuthBridge, and almost 14 more platforms for a one-on-one meeting and interested in buying. So basically, if you want to deploy their platform in your company, you can join us on Bazaar. That is part of the feedback form. You can just here. We will come back to you. If you join as a customer, it is completely free. It's on the table, so you can join. But if you have to be interested in buying as well, so that at least you can experience what you're looking at. Second is we have on 21st and 22nd of next month, we have a comprehensive training happening on digital lending, advanced certification digital lending, and we will have almost 7 to 8 speakers in that session, which are external, and of course me and Shashank take primarily the core of the whole lending business model, but we also have experts like Steve as well as Pratyush also joining. So if you are interested in learning more about it, deeper about it, you can join that session as well. And so these are the two things which are immediately around the corner for us, where you can join. Of course, after that we have cybersecurity. We are launching the biggest program till now, which is almost a 4-month program, which is on digital lending, open banking, end-to-end digital transformation from banking perspective as well. So that's about it. So let's move to the next one. Sagar, you want to ask a question, please?
Yeah, hi Samir. Thank you so much for allowing me to ask a question. Samir, just quickly, I wanted to understand from the perspective is that we all this talk about alternative data and how that's being used to improve the underwriting abilities of customers, new to bank customers, at the same time underbanked customers. I just want to understand: has there been situation where NBFCs, fintechs, or banks have been able to improve the quality of the portfolio because of these alternate data? Or is this just a new way of marketing the ability to underwrite customers, which was earlier not available? Because I have personally not come across many NBFCs/financial institutions or fintechs that have categorically proven that this alternate data has really helped to improve the underwriting ability and reduce the defaults and reduce the delinquencies in the portfolio, or improve the static pool of the portfolio.
Okay, Sagar, I think one-on-one we can always have a chat, but I think useful if Pratyush, you or maybe see you want to share the perspective, because Sagar, we'll always get a chance to talk to each other. Yeah. So,
yeah, true.
So very quickly, I think you're right. This is not being adopted as a general practice, and mostly the people are relying on the traditional data. You're absolutely right. Even if you look at the traditional data, the way it is being used, I think Samir spoke about it. Not many organizations are now using the score per se of the traditional data, right? They are using the variables because a set pattern, a set analysis has been done over a period of time, and everybody has evolved their own ways of understanding these data and consuming these data. I think similarly, there are organizations on the insurance and also on the e-commerce, and I would say even on the lending side, though there are limited customers, but we are definitely serving those customers. They are using this alternate data as part of their underwriting process, right? And they start with not necessarily that you have to really underwrite. They start with that, can they really find out that this customer, based on the alternate data, if the identity checks also does not meet up all the criteria, obviously the customer drops there. But if you go to the next level, you actually always keep on triangulate this information based on even the repayment history, based on the other information, whatever is available with you. So I think this will take time. And I clearly said in the beginning that there's not really a practice of using the alternative data. I think all of us are learning, and we are providing these solutions, and we know that there are customers who are using this and they're processing it. So maybe over a period of time, we will find more acceptability towards this. So that's my comment on this.
Sure. Sorry. No. I think just a follow-up point on that, and it's the same with the same thought that whoever is using it right now, Pratyush, has their portfolio been improved because of that? Do you think the quality of portfolio has gone up much better? Delinquencies have gone down significantly. Collections are much better because just the data is much more stronger and the data is much more of high quality.
Yeah.
Is there like empirical data on it for you guys?
Yeah. So we are not really exposed to this, but I'm sure there are something which is being done by these customers. But one thing I can definitely say is that use of this alternate data for the portfolio management has started first before they actually start using this alternate data as part of the acquisition strategy, right? So in portfolio management, this data has been useful, and I know many NBFC who are using this information. In fact, when I was on the lending side, I have used the AuthBridge data as an alternate data strategy to use as a part of my portfolio management and using for the early warning signal, etc. On the acquisition side, it has started. I think it will take time. And when you're talking about the correlating this, the portfolio performance, etc., and the static pool, etc., I think it is going to take time, because even if this data has been started using by many lenders, I think it's about a year or so when these things are evolving in this country. Once you go through one cycle and see over a period of 8 months to say 24 months, where generally the customers start defaulting. And if you look at it in the static pool, this is the way the entire delinquency pattern shows, especially in the 3 to 4 years of the loan. So I think it will take time to establish those credentials. But I'm sure there are advantages to this, which lenders who are using, they are finding it, and they are using more and more. Over a period of time, we will come many of such cases, and we will also go and create white papers wherever the customers are using. If they are able to establish this and clearly come out and say that, no, this alternate data helps us in terms of acquisition strategy, and the portfolio gets better.
Okay, got it. Thank you so much.
Thank you. I think in my funnel there are, Shiva is there. Shiva, I think last question belongs to you, and with this we have to close. I think we have run overtime like crazy.
Yeah. No, thanks for Samir, sir. Thanks. I think Pratyush and Steve, great insights. We really love to hear you. But I think there are a lot of startups and fintech startups, especially on this call. Just as a takeaway from both of you, one-liner, what do you recommend the fintech startups to look at? What would your recommendation be in terms of looking at the data and the way they have to manage it, clean it up, structure it? But if you just have to leave us with one big liner saying, this is what fintech startups should look at, because there's so many things coming up. What would your top one or two insights would be as a takeaway from that?
Yeah, so thanks, Shiva. Great question. And in fact, in a bit, I have in one-to-one interaction, I have given you some input on this. But in my view, I think in one statement, let us not ignore any data point and the information which is available in the public domain or even from the customer. I think every data point has got an importance, and we need to first establish in a sequence the identity of the customers whenever we are into the lending. The second is intent, and then the capacity. I think these three things, if we are able to establish, I think we are able to solve the large problem of the underwriting and acquisition strategy. So that's one liner from my side.
Yep, thank you. Steve, any insights?
Yeah, and from my side, it's all about the data, and it's really about understanding the data. So you can get data from all these different sources, but until you understand what that data means and in the context where you're trying to use it, it's not all that useful.
Yeah,
absolutely. Thank you, guys.
Thank you. I think we have seriously gone off board on time, but I'm very happy. I think somebody was asking me how your trainings go. Exactly, this is how we go. We keep talking. So sessions start typically at 9:30, and it goes all the way till maybe 6 o'clock in the evening. And after that, there's a workshop late in the night, which goes on for me almost 6 hours, 7 hours. So we've seen people working through the night for the initiatives which we take. So with this, I think we close right now. Just quick request I have. If you guys can put all your videos on, we will want to take a selfie. This, I think we close. Thank you guys for joining us, and we will be back with a new session again back very soon. Thank you guys.
Thank you. Thanks.
Thanks, Steve. Thank you. Thanks, Pratyush. Thanks, Shashank, for being such a great speaker. Right. Thank you.